Hi, this is Brent with Trade Therapy with another chart breakdown video. This time we are talking about Rivian. Rivian was part of our top-down analysis for a Clarity Spotlight on Tesla last week. It is Wednesday, October 9th. Tomorrow is Tesla's robo-taxi launch event. So we thought it'd be a good time to drop a video and support a couple of the charts that we published last week in Clarity. This is a chart that we highlighted earlier this year. Rivian is a chart that we have covered a few times this year as we have focused on these accumulation structures that have formed in the post-COVID corrective period. This is a chart that we captured in April when Rivian was setting a Wyckoff spring here. We see high volume, small bodied candle indicating that it is not selling off, it is being accumulated. We did also see some positive or some bullish divergence with the momentum indicator. Rivian, we're looking at the all-time weekly here. Rivian marked down right after IPO, went through a redistribution process, only then to come down, mark down again into this accumulation zone here. When the spring was set, we could see, and we did highlight all of these moving averages expanding away from each other. We've talked throughout the year about as moving averages expand, we should expect a return to the mean or a constriction of the moving averages back to the longer term moving averages. If I jump over now to the chart that we shared this past week, this is from October 3rd. This is the weekly Rivian chart from October 3rd. We can see that that's exactly what we got when the moving averages expanded down to set the spring. We got a reaction to that, a reaction off of that, which caused the moving averages to constrict again. This is an interesting move that came out of this Wyckoff spring in that you see a sharp, high volume, very high volume spike here with a sharp price increase right there. What's happening here is institutions are advertising that Rivian is making a move here. We've all heard the excuse me, we've all heard the phrase chasers get punished. This is where that comes from. This is very typical institutional behavior in late stage accumulation where they draw a bunch of retail investors in thinking that they've perfectly timed this breakout only to see it turn against them and see a little ABC corrective wave form here. What we see here from an Elliott standpoint is wave one, wave two is flat, wave three is sharply up, and then wave four is very deep. It's an example of Elliott's guideline to alternation, which we have mentioned a few times this year, where if wave two is flat, we should expect wave four to be deep. And vice versa, if wave two was very sharply down, we should expect wave four to be flat. This is very typical late stage institutional behavior. We see a sell-off on lowering volume. That indicates that institutions are not selling off their positions. They are taking out all of the chasers here and putting the finishing touches on their long positions. They are testing for sellers. They are looking to clear out anybody selling into them as they move out of this range and jump across the creek. They don't want to have to absorb any retail sellers that may have joined into this structure right here. So better to undercut this low right here and take them out now so they don't have to absorb them moving up. It's a way for them to do this as cost effectively as possible. We talked in Clarity Spotlight last week that using longer term charts as you get into late stage accumulation is a good way to look for subtle hints that demand greater than supply conditions are taking hold or that buyers are beginning to take control. Here, what we see on a monthly chart is we see this little extension of this candle right here for October's low. It undercuts this low right here, which was, if you recall, this was the high volume weekly chart or weekly bar. I'll go back to it here. Right here, this is the high volume weekly bar that was used to draw everyone in. It then is used, it then, we then see price come back down and undercut that. So if all of the people that entered long right here The low from that period was right around $10. I'll jump over to today's chart, show you that. Here's the low from there. That low was $10.15. Once institutions came back and retested that, they undercut it. This low is 982. So anyone that came in and went long against 10 or at this low, they would have set their stop just below that low, probably just under $10, which is why you see this extend down just below that at 982. We do have the institutional volume profile here. This is clearly the institutional base right now. All of the people that came and chased this move have been taken out. So what this is setting up is a very nice move up and out of the range right here. We think Rivian is set up to do a jump across the creek move. We've talked on and off this year about a Wyckoff Creek concept, which is this imaginary line that connects all of these peaks. Once price jumps across that, it is likely to backtest that area. This move right here, drawing people in and then taking them out, sets the table for that jump across the creek move because all of the sellers have been taken out of this range. There's no one left here to fight them as they try to push a price up and out of this range right here. Uh, we believe that we'll see what sort of
market reaction we get to
launch event. If for some reason there is some sort of a strong bearish reaction to it, if we do see late October seasonal volatility come in with the presidential election and see a new low or a push down here to try to test this low, even if it undercuts this low slightly and sets a new spring right here, that does not invalidate any of this analysis. All it does is just sets a new low, and we'll see a new breakout structure form as it comes out and as they begin their markup period. It's not our primary expectation. Our primary expectation is that this is the end of this corrective wave structure right here. We believe that we will see an upward price thrust coming out of this, most likely positive reaction to the Tesla robo-taxi event would produce that sort of behavior. Long term, we're very bullish on Rivian. We did run some Fibonacci. We read this level right here, which is this one, against the all-time Fibonacci here, looking for clusters. So there's clearly a cluster right here. There's one right here. So if we had to pick, there's also one right here. So if we had to pick targets, we would look at the 618.17 is probably the first target. Second target will be in this high 20 area right here. And then 60, 55, high 50s should be the next target right there. So some sort of a move like this, hitting each one of these target areas is what we're expecting. We'll see what sort of reaction we get tomorrow at Tesla's robo-taxi launch event.